Good morning, good afternoon, and good evening, depending where you are on the planet. And welcome to the Monday, the 5th of December Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. We're going to go for our usual regular run through with that slight twist for the Monday. We're going to take a look at the week ahead, what we've got coming up, bigger picture for the week ahead. But we'll also go through the daily calendar. We'll take a look at the macro fundamental events that are impacting markets right here, right now. Take a look at the major news wires, and we'll also look at some technical levels on the chart. First of all, before I do all of that, just to remind you all, we have our second Trader Mind session. We had the Technical Tuesday last Tuesday, being replaced this Tuesday by the Trader Mind session, the second of our Trader Mind sessions with James and I. James in the UK at the moment, so we'll be doing that side by side together. That is going to be tomorrow, Tuesday, the 6th of December at 9 a.m. Central Time. That's 9 a.m. Central Time, 10 o'clock Eastern. So that is then 3 o'clock in the afternoon if you are in the UK, and if you're on Central European time, it's 4 o'clock Central European time. So 9 a.m., which actually made a slight tweak to that. It's going to be 9 a.m. Central time tomorrow. That's 10 o'clock Eastern. That is then 3 p.m. If you're in the UK, and 4 p.m. Central European time. So do join us then. We'll be talking all things trader tomorrow for the Trader Mind session. Let's take a look first of all. Actually, I need to go. Let me just quickly go to the trading room. We're going to get a bit of quick feedback in here, but I'll quickly get through that. We're going to just download the weekly recap. Oh no, little bit of feedback. So there we go. So got rid of that feedback. So let's have a look at the recap and the outlook for the week ahead. So last week was all about really Powell. Powell drove the market higher again, we know, signaling a smaller interest rate hikes going forward, and saw a general risk on rally. Also, bond markets are rallying to lower yields as well, but a general risk on rally, dollar weaker, and stock markets in the US and globally pushing higher on Wednesday through Thursday post those results. We also had the US employment report on Friday, much higher than anticipated. We expected consensus estimates were for 200,000, a slowdown to 200,000, but the number came in at 263,000 jobs added for November, with the unemployment rate staying the same at 3.7. That more positive outlook for the market, for the economy, ended up being negative for the market. Why? Because then it looks like then the Fed could be potentially more aggressive with their interest rate hikes. So the market initially lower, stock indices initially lower on that, but then staging a healthy rebound in here, maybe buyers coming in on the dip, given the more slightly more dovish tone that's been continuously reiterated with this shift to slower pace from hikes from Powell the previous day. So that certainly impacted markets overnight. So we did get Chinese stocks initially lower at the beginning of last week on the civil unrest that we saw over the weekend, and then higher as Beijing was seen as moving closer to reopening the economy. We've had further kind of information on that, of reopenings, and potentially more coming on Wednesday, which I'm going to talk about shortly. And that has seen Chinese stocks and Asian stocks rally overnight this morning, and helping European stocks initially higher today, and US stock futures initially higher, but then they have dipped back lower since then. So yeah, a solid week for stocks in here. US Treasury yields went to multi-month lows. US dollar weakened. Gold rallied with the US dollar weakness, and oil prices were erratic. But I've seen, and then over the weekend we had this is not included in here, but we did have OPEC Plus over the weekend. OPEC Plus leaving the production unchanged, and not having a particularly big impact into the oil market. But what has had a more positive impact into the oil market has been the news of potentially from the weekend of a relaxing of the zero COVID policy from China. Obviously, that then creates increased global supply and demand out of China, and then that's seen as a positive for oil. Going into this week looking ahead, on the central bank side, it's relatively light. We have the RBA interest rate decision, and then the Bank of Canada interest rate decision coming up this week on Tuesday, Wednesday. And on the data side, it's fairly light in here again. We've had so far today global service composite global services and composite PMI data from S&P Global, and we also get the US ISM number later today. So that's going to be the big data really for the week. We've already had coming out US PPI, Michigan consumer sentiment, much later in the week, but it's a fairly light calendar on the data front. If we go into the daily calendar, you can see most of this data so far has been in the red, worse than expected from the French and German services PMI data, the European composite data in line with expectations, the service sector from Europe worse than expectations, from the UK worse than expectations on the composite number, in line on the services number. So most of the European PMI data from S&P Global this morning has been worse than anticipated. Also, retail sales worse than anticipated this morning. The focus now, 9:45 Eastern time, the S&P Global composite and service PMI data from S&P Global. Obviously, that's the least watched of the two PMI releases. The more watched one for the US is the ISM number, which we get at 10 o'clock Eastern. We get the service PMI data coming from ISM then. That's going to be the main focus for the day. And then overnight, we get the RBA, the Reserve Bank of Australia. Okay. Fundamentals, 5 things you need to start your day. What's been happening? Well, Chinese, this is really the main story we've had over the weekend. Chinese authorities going to testing the easing of COVID requirements in here and across major cities. And so we've certainly seen a shift, and rumours are further coming, and we'll touch on that as we go forward in here. Coming from Wednesday is what we're hearing. Saudi Arabian Crown Prince Mohammed bin Salman is potentially going to be investing into Credit Suisse, leveraged loans credit. None of this in here really impacting too much on us. US equity futures slightly lower in here this morning. So a relatively light calendar and over the weekend, but really just that Chinese news. Future slips, yields rising, Chinese optimism fades. So initially, Chinese was positive. Commodities are higher on Chinese signals of further reopening. And here and again in here, China may announce 10 new COVID easing steps come Wednesday from Reuters. Chinese stocks in US resume rally. Beijing hastens COVID pivot. So all of that's happening. Chinese stocks climb. Yuan jumps past key level of reopening shift. And then oil climbs. China loosens curves. But OPEC Plus keeps output unchanged. We've already covered all of this really. Futures fall. Investors wait more data before Fed meet. Well, that's telling us nothing. And then this was, Fed's barking, labour supply likely will remain constrained. So we still have a very tight labour market. That was echoed, reflected from the non-farm payroll data, much stronger than anticipated in here. And barking kind of reflecting that in comments, saying that the labour market may stay tight for some time going forward. Labour supply looks like it remains constrained in here. What else do we have? European markets kind of mixed in here this morning. The DAX German index down about 0.5%, the CAC down 1/3, the French index, the FTSE up about 1/3, the UK index. And US stock futures going into this morning are slightly lower, between 1/4 and 4/10 lower, just dipping from there. We had the sell-off and the rebound back on Friday and just dipping back into Friday's range. This is quite interesting, I thought. This is actually higher. So this has crept up. This was in the mid to low 70s. The chances of I think this should be a lot higher. I think they're nailed on now for a 50, right? But there is, an outside chance of a 75 rate hike at the next meeting on the 14th. But this has crept a little bit higher, up towards 80 from the mid 70 area, even despite the US data on Friday being more positive than we kind of expected. Okay, let's take a look at the charts. Going to kick off in here with the S&P. So there's the dip and the rebound from Friday. Obviously, the surge on Wednesday, marked time Thursday, dipped, rebounded, only a minor dip in here. I still feel that the outlook in here is pretty positive overall. You do have kind of a succession of lower lows and lower highs, but there's that big sell-off we had on Friday on the data. That's the employment report, and then the market, got that most of that back before, and then we rallied right into the close to pretty much close the day out unchanged. A slight drift, but you can see in here the support levels in here holding. So we've got support in here around 40, 50, 51, 50, 40, excuse me, 40.51 to 40.49 area in here, and the market holding above that thus far. Down through there would open up, I think, deeper correction risk down towards this 40.30 kind of area. But whilst holding above 40.51, 40.49, looking for upside, probably looking for it to look more bullish if it gets back above the 40.72, 73 kind of area up here, is more of a bullish trigger. Let's take a look at the NASDAQ. Again, the dip and the rebound from Friday, only slightly lower in here going into this morning. And this is a 5-minute chart, so I'm going to change this back to the 15. And if we go and look in here, there's the Friday sell-off and the rebound. And again, if we looked in here, this is the Wednesday rally, okay? If we go and put the Fibonacci retracement, you can go do this on the... If we look in here, the market's just clipped below the 50 and held above the 61.8. Yeah, held bang on the 61.8, but wasn't very long below the 50. It was that sprint lower that we had right on the number and was very quickly back above the 50% and came right off the 61.8% retracement, almost to the tick there on Friday. And if we go and do the similar for the S&P, hold on 1 second. Let's just squeeze this up a little bit in here so we can get it all on. We're going to do the same for the S&P. Again, you'll see that market comes right off the 61.8% retracement and wasn't very long below the halfway break. So it kind of defended effectively, definitely defended the 61.8 and kind of defended the 50%, the halfway point of that Marabuzo candlestick that we had from Wednesday's surging rally, which then extended through into Thursday. So yeah, still hanging on to a lot of that positive tone. If we go back in here to the NASDAQ, where are the trigger points on the NASDAQ, where I think, you got the current overnight low is important. 11,942.5, but I think these supports in here, so that 11,910 down to 895 area, I think that's more important. Down through there would signal more negative. On the top side, I think you've got a string of failure peaks in here around the 12,000 level. Back above 12,000, things look more positive for NASDAQ. Let's take a look at oil and gold. Quick nod to those before we wrap up for the day. We'll start off with oil. Strong day because of China, not so much because of OPEC, more because of China in here, following through from a strong day last week despite the dip on Friday. Strong session in here today, can only set up more positive in here. Look at this whole support area around here. Look, all these previous chart supports and impulse levels gathered between really just below 80 down to 79.60. So from $80 down to 79.60, really strong support. We've taken out these peaks in here in the last hour or so around, or that peak there is 82, where are we? 82.22, and we've taken that out, I think back up through the high, just waiting for any dip down in here towards, I'd say 81.70, 81.60 area, or back up through the current peak in here for the day. 82.40 all sets up more bullish. Let's take a look at gold. Oops, why did that jump over there? Oh, 1 sec. Let's bring it back across here. Here's gold. So again, dipping a rebound, echoing the stocks in here. A really strong rally obviously on Wednesday, went to a new recovery high, dipping a rebound. Today though, rally and a setback. Okay, so kind of a little bit the opposite for today's move in here. We did make a new high and then setback. We have undercut some support in here around the 1808, 1807 area, but kind of holding in. I'm going to cling on to a positive outlook in here. Really needs to get back above that little peak there though, back up through 1814.6 really needed for gold. If it undercuts the low, the current overnight low is 05.5, then it could retrace down into, but then definitely looking for support to kick in the 1795 to 90 area. Not only the lows here, but these support over here. So 1795.90, but down through the low could open up 1795.90, but still holding on to a more positive outlook for gold. All right, guys, I'm going to wrap it up there. A reminder again, am I going to be able to go back here? No, it's not on there. But a reminder again in here, today, we do have the Trader Mind session tomorrow. And the other thing, if you haven't seen it, I need to mention about the Ninja Trader. Okay, I should have done this right at the beginning. So Ninja Trader now available. Okay, you go in here, trading platforms, all the instructions to download in here. Okay, all the instructions. Okay, very, very clear in here what you need to do to download Ninja Trader. Okay, you can go and use Ninja Trader alongside Tradeovate now if you so wish. That means you can trade on Ninja Trader, and then all the trades, everything you have on Ninja Trader will then be reflected in your Tradeovate platform as well. So on the online platform for Tradeovate, or the downloaded platform for Ninja Trader, you're going to see the same, all the trades, everything's going to come across between the two. So you can use the Tradeovate app to check when you're on the go, and you can trade on Ninja Trader. So a big development for us. Please do go try it out. Ninja Trader now available. Should have mentioned that right off the bat at the beginning, but I forgot. With everything else going on, we've got quite a lot going on here at Trade Day. So yeah, but do try out Ninja Trader if it's your preferred trading platform. You can do that now in here. Trading platforms, drop down Ninja Trader, and then don't forget. Then tomorrow. We have, I don't want to go back in here. I don't want to go into the trading room, but tomorrow we have the Trader Mind session. Tomorrow, 9 a.m. Central, 10 o'clock Eastern, 3 p.m. UK, and 4 p.m. Central European time. Going to wish you all a great trading day. Stay safe, and I'll be back with you with another session on the webinar, the Bull vs Bear webinar tomorrow. Bye.